when you buy a property, they don't come shiny and new. Some tenant has been tearing it up, and that's probably why the landlord is selling it. So you need money for this thing called make ready. Like you got to make it rent ready. So that 25,000 probably turns into 35 or 40,000 that you need to start. Again, why that house hacking is so powerful. It turns it into maybe 10 to 15,000 that you need, which is possible to save again, because remember, you have years. You have a couple of years to save for that first place. Howdy. Back. Welcome back to One Rental at a Time. I'm here today with a friend of Zuber's, Grant, who had an amazing video earlier this week that you should check out. There should be a link in the description below. But Grant has some questions for people who have made work optional. So Grant, it's really nice to meet you. I'm looking forward to this.
Nice to meet you too.
If you'd like, you can go ahead and start with the questions.
All right. Thank you so much for letting me ask these questions. So the first one that I have is, can you give a little bit of background on yourself and on your experience with investing and any experience in real estate investing?
I can. I didn't start investing until I was 40. So let's tell people how old are you?
16,
16. Do you think you will ever be 40?
most likely, hopefully.
Most likely, hopefully. Okay. Yeah, I made it to 40 without ever thinking about money, without ever investing. And so I started pretty late in life. I think every investor that you're going to talk to will say things like they wish they started sooner. I interviewed a 20-year-old who had 30 rentals, and he said he wished he had started sooner. I think that's kind of uniform no matter what our age is. It took me about 10 years to make work optional to where I could walk away from work, and it didn't take a huge portfolio. You're at Zuber's house, and he is one of the uh, investors who has a larger portfolio, and he focuses on getting to four, and that was my goal, is just get to four and then figure out if you like it or not. And so I had 16 rentals when I retired, and that produced a little over $200,000 a year in cash for me to figure out how to spend. Um, I've been retired for about 2 years. I'm still learning how to spend the money because it took, as you and save and invest money, you're going to build habits. You're going to look for the cheaper price. You're going to learn how to sacrifice. You say, I'm not going to go out with my friends because that costs money. I'm going to save the money and invest. Well, when you retire, when you have enough money, you have to turn that off. You have to actually enjoy life.
Definitely. All right. So you kind of touched on this while you were giving your explanation. So my second question was, how early would you start to prioritize real estate investment over other options like more, I guess, traditional types of investing?
I think the hardest thing to do is to find out who we are. And some people are excited about spreadsheets and data charts, and stocks are just going to thrill them their entire life, and that's where they should stay. There are people like me who I wasn't making a lot of money. I had three kids. I was a single parent when I started investing in around 2010. I started saving. I was making $17 an hour. I'd gotten laid off from being a cop, and I wasn't making a lot of money. So investing in stocks really didn't make sense to me. So who are you? Do stocks excite you? How much money do you have to invest? The younger you are, the more attractive stocks are to me, because you have decades for compound interest to do its thing. You have money more years for it to grow. If you start later in life at like 40, like I did, I wanted everything in a decade. I wasn't making a lot of money, so stocks didn't really work for me. And I have a friend, I've been friends with him since forever. We were in Desert Storm together. He was a Marine with me, and I love him like a brother. And I say this to his face, so I wouldn't say this in a video if I wouldn't say it to him. But my friend Adam has a personality of a pregnant yak on methadone. So he should not be a landlord. He should not own rentals. There's no way he should manage a property manager or manage tenants. It's just not for him. So he invests in stocks. He invests in working for a pension. So that's the hard part, is who are you? And most people won't openly admit, even to themselves, I don't have the skills to do this. Many people can manage a property manager, and most people can manage tenants. But there are people who need to know themselves and know that there are other options that would work better for them.
Great. Thank you so much. And so, assuming that you are that type of person, you've decided that real estate is something that you want to pursue. How accessible for young people, especially maybe not my age, maybe around like college, or maybe college graduate. How accessible do you think real estate would be as an option?
So this is going to irritate some of the people who watch. And I'm going to try to explain this to you, not to the people watching, because some of the people watching are just going to get angry. You're 16.
Mhm.
Okay. So in 2010, you were 2 years old. Is that the math on that?
Yeah,
Okay.
round.
That's when I started investing. I think investing in real estate right now, and this is the part that's going to irritate people, it's easier now than at almost any point in history. And people are going to say it's really hard to start now. Prices are high, interest rates are high. You're going to hear every excuse in the world. When you turn 18, Zuber says this. He actually teaches this at high schools. I've seen his presentation that he does at high schools. This is at 18, you're closer to financial freedom than you probably will be at any point in life. You generally don't have kids, usually, right? You don't have a spouse. You don't have the fancy, expensive car. You don't have all the student loan debt. You don't have all the things that are going to be pushing you further and further away from financial freedom. In 2010, I started saving. So my first property I purchased in 2013. In 2013, everyone was saying, don't buy real estate. Because in 2008, there was a housing crash. Have you heard of the housing crash?
Yeah.
Okay. So prices dropped a lot over like 5 years. They just kept going down. In 2013, prices had started to go back up and they went above where they were in 2008. And everyone was saying, don't buy real estate. It's going to crash. It crashed in 2008. They cost more now. There's no way this is sustainable. Nobody can afford a house. So I purchased a duplex. And then in 2015, when I bought my next one, everyone was saying, don't buy real estate because all of these people called baby boomers, right? If you're over in the next generation after Generation X, they were hitting retirement age. And when people retire, generally they sell their house and they buy a smaller one to downsize. So everyone was saying there's going to be this what's called a silver tsunami because of silver hair. People were going to be retiring and flooding the market with houses, and all the prices were going to drop. So don't buy because you don't want to buy something and then the value goes down because you still owe all that money on something that's not worth that much. Didn't happen. 2018, when I purchased another duplex and paid off a mortgage, interest rates went above 6%. Right now they're above 6%. They were really high when I was a kid. They came kind of down, and in 2018 they were going back up. Everybody said, like, now don't buy. Prices are high because they'd gone up the whole time and interest rates had gone up. So no one can afford to buy a property, and don't do it. So I bought another one. In 2020, you probably remember this, right? We had the pandemic and you got locked out of school and the world shut down for a while. And everybody said it's the end of everything. Real estate's going to crash. The stock market crashed 30%. Don't buy real estate. Because I listened to Zuber, that you're the guy whose place you're at. I bought a fourplex in January and I bought a triplex in November. Probably two of my best purchases that doubled how much money comes in that I don't have to work for. In 2021, everyone was saying there's this thing called forbearance, right? So if you can't pay your mortgage, you can actually tell the bank, hey, life's terrible right now. Let me take a year off of paying my mortgage. And when things were bad enough, banks can let you do that. Well, that was ending. And everyone was saying forbearance is going to end. The housing market is going to crash. Don't buy another one. So I bought another duplex. So right now in 2024, if you're tracking the pattern here, every year it's easier to find fear. And everybody's going to say, it's so scary, don't buy because. Well, right now, when you turn 18, hopefully in a couple of years, this is still an option. You can buy a duplex, which is 2 units on one property. There's a triplex, which is 3 units, or a fourplex, four on one property where you can live in one and rent out the others and only put 5% down. That didn't exist a couple of years ago. You had to go with what's an FHA loan, which is a really bad loan product. But right now you can do that. And remote work is driving up rents because people can have New York or Seattle or San Francisco incomes, right? They can work in tech and make $300,000 or $400,000 a year and move to Chandler, Arizona. They could like the desert heat for their health and they can go and pay 2 or 3 times what the rent was and it's still a good deal to them. So I purchased a property last year where the rents pushed up really high because the remote workers will pay more rent, but the prices didn't push up because remote workers don't want to buy because their company might make them go back to the office. So Every single year, you're going to hear all of the people, because fear sells, telling you don't buy. And every year of your life that you buy a property, that year will be stressful and it will be hard and you will think you made mistakes. But 3 or 4 years down the road, you're going to thank yourself. And if you start at 18, you generally want to work in a field for 2 years. That's what banks want to see, right? They want to see 2 years of consistent in the same industry income. You want to keep your credit score good, right? Automate every payment, try not to go into any debt, like credit cards and those kind of things. Watch a bunch of videos like Graham Stephan has some videos. I don't know if you're familiar. He's a YouTuber that tells you this is how you improve your credit score. He's got some older videos that are really good about that. Work on those things. And then when you turn to, between 18 to 20, after you've worked for a couple of years, you don't have to be 30 to buy a house, right? Most people, when they move out of their parents' house, they go out and they get roommates. They rent a place and they get roommates. And it's like they say, help me pay someone else's mortgage. But when I go buy a house, don't you dare help me pay mine. So maybe if you buy a house, still have roommates, right? It's a little harder to do when you have kids and a spouse and everything, but that 18 to 20, right in that range right there, just like Zuber says, it's the closest point you'll ever be to financial freedom, the easiest point to transfer to that.
Great, thank you. So you talk about buying and purchasing properties. So I was wondering what your most important steps leading up to a purchase is. What are you looking for? That kind of thing.
When you talk to people who invest or people who want to invest and you ask them that question, they're going to talk about investing. And I think that's the mistake. I think you right now thinking about investing is how you start investing, because there are several steps that happen before you buy an investment, whether it's a stock or crypto or a rental or any type of investment like that. The first step is you need to learn how to save, right? However much money you make, most people think this is how much I have to spend. And then they have credit cards and they spend more than that. So you need to change that way of thinking of how can I make as much as possible, right? Illegally, and not spend that much so that I have something to save. So if you can learn how to save and you don't, let me see if I can explain this. We don't save when we make more money. A lot of people say, when I get the raise, when I get the promotion, when I change jobs, I'll make enough money to save. That's not how it works. Because when you get the raise, inflation is happening at the same time. Things cost more. So you don't have any more money to save. What has to happen is when you're making very little, that first job that doesn't make very much money, you have to take something, even if it's like 50 cents a month, just a number. Because if you measure something, you can improve it. 50 cents, you can turn into $5 to $50. As you make more, you can grow it. So you have to learn that habit when you're making very little. The second step I mentioned earlier is to be thinking of your credit score. And how many people your age think, if I attach my name to my parents' credit card, I can establish credit, even though I don't use the credit card. And my parents can lock the card up in their safe, but my name is on that card. I can start establishing credit at 16. Right? There's strategies to do that so that when you get to the point where you go to buy an asset and you need a loan to do it, like buying a rental, you already have established credit and not creating bad debt, which can mess up your credit score. Then the next step, and so this is save credit. The next step, as you get to be closer to the age of 18, there's these things called lenders, right? So people think of lending, they think of banks, but there's also credit unions, there's also mortgage brokers, there's companies. Zuber has several come on the channel. Maybe you're going to interview some of them. That's what they do. They do loans for investment properties. And you go talk to them, and you might not be ready to buy, right? There are people like a real estate agent, you don't want to talk to them until you're ready to buy, but a lender you want to go to early on to say, what can I do to make it more likely that I get a loan? And they'll say, work in the same industry for 2 years. You don't have to stay at the same company, but if you're going to do a type of job, you want to do that job for at least 2 years. Get your credit score to at least this amount, and that amount changes, so you'll want to talk to the lender to find out what that is. And then the lenders can say, here's your other options, because things like that 5% down loan that I talked about, that changes every couple of years. That's 3 steps that you can do for a couple of years before you've even picked a market or what type of property you want to buy or anything like that.
Great. So when you're you specifically, when you're decided, or I guess in the process of saying, hey, I want to buy not a specific property yet, but what do you think the most important tools in your toolbox for actually doing that, like resources or sites or people that you look to for um, advice on how to do that?
Knowing Zuber is going to be the cheat code to life for you. Having somebody like that you can ask. For me, it was finding other investors who did what I want to do. And we might not have those in our real life. You might not be able to walk over to Zuber's house and sit down and ask him questions. But that's where YouTube University comes in. And a lot of times the videos that get the most views are the ones selling fear. The crash is coming. It's not a good time to buy, whatever. So you need to find the people like Zuber, Coach Carson, Millennial Mike, Lumberjack Landlord that bought rentals, created cash flow. Ask them how they did it, what worked, take notes. And I don't think you're going to find somebody who has a model that you just go and do that model. I think you're going to learn something from Zuber and Matt and Mike and Coach, right? Take little things and put them all together to figure out what works for you. Because where do you want to live? There's this thing called house hacking. It's one of the ways that I got started. You buy a duplex, so it's two houses on one property, basically. I lived in one, rent out the other. So it's a way to do it with my kids where I didn't have to have roommates. And what strategy is going to work for you? Do you live in an area where rentals make sense? There are people like Zuber, he had to go 2.5 hours away to find a market where it made sense. That Millennial Mike that I mentioned, he invests in a completely different state. I preferred with my personal habits to invest where I live. I wanted it to be a high cost of living area. That's weird. People say I want to buy a cheap property. I wanted to buy more expensive properties because the more expensive the property, the fewer properties you need to get enough cash flow to be able to retire. Whereas if you go to a cheaper market, it takes dozens and dozens and dozens of properties to get the same cash flow that I get with just I only have 8 properties and it made 204,000 the year I retired, 235,000 the next year, like it continues to grow. I spend about 50,000 a year. So before we wrap this up at the end, I have some questions I want to ask you too, but please.
Of course, yeah. All right. So you talk about having these properties. So after you've purchased them, after that's done, what is the process to actually attaining the cash flow that you're talking about?
One of the first steps is understanding the expenses, right? If you talk to a brand new investor and you say, well, how much does the property cost? They'll figure, okay, well, how much was the down payment? When you go to buy something, you have a down payment. So, and I'll use some kind of round numbers. Let's say you found a property that was worth $100,000, right? And in some areas it might be 1 million, in some areas it might be 10,000, but 100,000. If you want to buy it as a rental and put 25% down, you need $25,000. That's a lot of money. It's a significant investment. You can make that all the way down to $3,000 if you buy it and live in it, right? That's how big a difference living in it is compared to buying it as an investment. So they'll say, well, I need $25,000 to buy the property. That's not true. You need 25,000. You have these things called closing costs. So you have an appraisal and an inspection and a bunch of other things that you'll know before you go to buy a property that cost thousands of dollars. The bank is going to want you to have reserves, right? You have to have thousands of dollars in the bank that you don't use in case the tenant doesn't pay their rent, you can continue to pay. So the bank wants to cover the risk by you having reserves. When you buy a property, they don't come shiny and new. Some tenant has been tearing it up, and that's probably why the landlord is selling it. So you need money for this thing called make ready, like you got to make it rent ready. So that 25,000 probably turns into 35 or 40,000 that you need to start. Again, why that house hacking is so powerful. It turns it into maybe 10 to 15,000 that you need, which is possible to save again, because remember, you have years. You have a couple of years to save for that first place. So those are the skills that it takes to get into the cost of you said, how do you get to that cash flow? How much does it cost to acquire? And then you have these costs every month where you have a mortgage, taxes, insurance, you have to pay to keep it up. What if your tenant doesn't pay rent, right? So cash flow isn't just the money that comes in. It's the money that comes in minus you have to pay for everything. And then we also set aside money in case there's expenses in the future. If there's expenses in the future, we set aside money out of that rent. And a lot of people pick a percentage. 10, 20%. So if you're making $1,000 in rent, I set aside 15%. So $150 goes into an account. So after you pay for your expenses, after you set money aside, what's left is the cash flow.
All right. Thank you. So my next question for you is if you could restart your career um, from very beginning, say like my age, what would you do differently?
A lot of this is going to come down to what you like. Okay, I'm not much of a people person, so I don't want like, people like Matt and Zuber got into sales and those types of positions. I've been a Marine, a cop, and a truck driver, and then I became a truck driving instructor. If I was 18, and I know people are going to say, well, don't do this till you're 21. That's backwards. I would get a CDL, a commercial driver's license. So this is me specifically. The only think of what would matter to you. Maybe you want to work in IT, maybe you want to work in sales, right? Pick the industry that you want to do. I am not an entrepreneur. I don't want to go start a business. I would work as a truck driver for a few years and do those steps I talked about. Make as much as I can, spend as little as I can, learn to save, work on my credit score, talk to a lender. I'd buy a house hack. It'd probably take me 2 years working as a truck driver. This is me just starting from zero, working in a new field, but those 2 years to buy a duplex. Do the exact same thing that I did. It's kindergarten simple. People would say it's super boring, but to me, boring is sexy because boring makes it to where after 10 years, I never had to work again. The idea is now, here's the worst case scenario. It takes 2 years to buy a duplex, and then 2 years to buy another, and 2 years to buy another. So in 10 years, you'd have five. That's 10 rentals because it's five duplexes. So there's 2 units on each one. So I'd have 10 rentals. I'd live in one. 9 rentals, cash flowing every month. But one of them I've had for 8 years. One of them I've had for 6 years. One I've had for 4 years. So rents have gone up. I've had the chance to refinance, maybe a better interest rate. At 10 years, work would be optional. I'm in worst case scenario, I might have to work a little bit more, but best case scenario, I'd be getting promotions or I'd change companies to a better driving job that paid more. I'd have uh, living in the duplex, I wouldn't be paying for housing. So I'd save a lot more. My payment would be a lot less than renting an apartment or a house or owning a house. It would even cost more. And then as those rents go up by that, like for me, around year 5 or 6, I had started to make more money. My properties were cash flowing. I was paying less to where I lived. So it went 2 years, 2 years, year and a half, year, 6 months, year, right? It sped up towards the end to where I had 8 properties in 10 years and I was able to retire on making literally hundreds of thousands of dollars when I spend 50 to live.
All right. So you talk about house hacking. Could you just kind of summarize what that is and what you think its pros and cons are?
When you move out of your parents' house, what do you think the most expensive thing is going to be?
Oh, probably housing.
Housing, right? You might make a mistake and go buy a really fancy car and have $1,000 a month payment, right? How much is rent in your area for a house?
Ooh, not sure. I think it's pretty high.
It's pretty high, right? So
Boston,
that would,
yeah.
yeah, would be one of the first things that you're going to want to find out is how much does it cost to live somewhere because you have the rent, the utilities, the all the stuff that comes with living somewhere. And if you buy somewhere, most people they say the American dream is to buy and own a house, right? That's a very expensive thing. So that's where house hacking came in for me. Now, maybe when you turn 18, you go get a job that makes a ton of money. I was not making a ton of money. So where I had to live somewhere. When I lived in an apartment, I was paying about $1,500 a month, right, for the rent. I moved into my duplex and now I was paying $300 a month. This is the biggest impact of house hacking that most people talk about, right? So I can now save $1,200 a month. That's a lot when you're making $17 an hour. That's huge, right? But here's the real benefits to house hacking that I don't hear talked about as often. If you want to buy a duplex, and mine was say $300,000, 25% down would be $75,000. I did not have $75,000. Living in the duplex, I needed 5%. That was $15,000. So instead of having to have $75,000 to buy a rental property, I needed 15 plus, the closing costs, the money to make it rent ready. So it was a little more than that. I started, I think, with 28,000. That's how much I saved in those 2 years. So When you get a mortgage on a property, right, the bank is taking a huge risk. They're saying you're buying this place for $300,000, you're putting in 15, the bank is putting in $285,000, right? But they're going to make money. They get paid interest, right? If you buy it as an investment, that's very risky for the bank because you could just walk away. You go, I don't want to own the rental anymore. It's harder to do that if you live in it. So when you live in a property, the bank will say, if you want to buy this as a rental, the interest rate is 6%. But if you live in it, we'll give it to you for maybe 5% or maybe even a little lower. So you get a lower down payment, a better interest rate. It costs you less to live there. Those are the benefits to house hacking. Here's the negatives. You live close to tenants. You have tenants, right? Not everybody wants tenants. So house hacking is not an option for some people. If you have kids, you have to be concerned with who do I let around my kids. That's why I didn't go the roommate route. I went the duplex route because we had separate fenced yards, garages in the middle. So like, I don't know if my tenants and my kids interacted very much. Um, if you have a spouse, you have to convince them, hey, let's make this really weird thing. Instead of buying a house, let's buy a place. And it's for a year, right? You have to live there for a year, not forever. And not too many spouses are always in agreement of, investing is important. Right? Some people, it's our vacations are important, our jobs are important, our kids are important. All of those are important. But if you focus on your financing, all of those other things get better over time. Like the first 5 years are harder. That's the thing that's hard to get the spouse on board with. The next 5 years are amazing. So that's kind of the benefits, pros and cons to house hacking.
Great. And the last question that I'm going to have is what's one mistake that you think young investors should be avoiding?
So there's this thing that a lot of older people do, and younger people do it in a different format. So when you're my age and you make enough money from your investments to retire, I did this for 4 years. So in 2018, I reached what's called financial freedom. There was enough money coming in from my rentals where it paid all my bills and it was more than my bills so that I could handle a bad thing happening in the future. It didn't have to work. But when we're older, we say, one more year. If I work one more year, that's a year of my retirement. I don't have to fund from my investments. If I work one more year, I'll make more money to invest. If I work one more year, I'll be closer to so security, which is that money that might be there when you turn 62. If you work one more year, you're closer to Medicaid. You get all these things that you get closer, right? But you're losing very fun, active years of your life when you can still go do things for maybe better years later. So it's called one more year, not now-itis. When we're younger, here's how that works. Do you know what your credit score is?
Ooh, don't think so.
Okay,
Not off
because
the top of my head.
you're going to worry about that in a year when it matters later. Okay. Uh, have you learned how to save? Do you have a set amount of money every month that you put somewhere? Have you figured out you get a job, right? So it starts right now. Everything that you can ask about money when we're your age, we say next year, one more year. I think when I turn 18, that's when it's going to matter because I probably won't live with my parents. When I turn 21, that's when it'll matter because my friends will be going to bars and I won't use my fake ID anymore. And I might have to actually start paying for drinks. And just one more year just keeps rolling into that. Don't let it happen. Every year that goes by, you'll be that person saying, I wish I started sooner. That doesn't mean don't live. It just means make a part of your life focusing on your money. Because if you put your money to work, you won't have to. And then life can be whatever you want it to be.
Great. Thank you so much for taking the time to answer my questions.
Cool. So just before we finish this up, I have a couple questions for you. And these are just really simple ones. The first one is going to be, how much do you think people are paying for rent? So that might be something you go look into. Um, don't name the town, but where do you live? Like, are you close to Las Vegas? Are you in Nevada? Are you
Oh,
somewhere else like
no, Boston area.
Boston area? Okay, so you live
Yeah.
close to the lumberjack landlord. What do you think the average income, like the average person, if you see 100 people, what are most of them making every year?
I think in Boston it's pretty high, the average income, just because we have a lot of like high income industries. I think like tech and biotech specifically. So it's probably pretty high. I'd say maybe in like the high 10,000s to hundreds of thousands, maybe.
Okay, so in the hundreds of thousands. Maybe Google search and do average income. Now there's three forms of that metric when you look at that. So you've got average, which can be real spiky, right? You've got median, which can be a little more accurate. But really what you want to know is this thing called mode, MODE. You want to know the most people make this number. It's the most common income. You may be shocked at how low it is, right? There are people in Los Angeles County that think everybody makes a lot of money because it's LA. There are people making $15,000 a year. Like there's incredibly low incomes in high cost of living areas. There are more social resources where there's more money, so you tend to have a lot more poorer people. Uh, Here's a math question for you because you're 16. Um, okay, hypothetically, if I want to buy a soda and a Coke today costs $1 and inflation is 3%, next year, how much will that soda cost?
It's $1.03.
There you go. That's the question I want you to ask all of the adults that you know. If a soda costs $1 and the inflation is 3% in a year, how much will it be worth? You will be shocked at how many grown-ups with jobs that run money and write checks and pay bills don't have a clue how that works. Thank you very much.
Thank
This
you.
has been awesome.